Welcome to European Hidden Gem Stocks. This is a channel where I deep dive European stocks flying under the radar. Today we're going to be looking at a SaaS company based in the aviation sector in Sweden. Let's have a look. There's quite a good chance you've never heard of this one. It's called AVTECH based in Sweden. Goes under the ticker name AVT-B on the Stockholm Nasdaq Stock Exchange. It trades at a pretty rich multiple, around 45. Well, it is a SaaS company after all. What do you expect? Market cap is very small. So in Swedish currency, it's 523 million Swedish krona. That's only 47 million euro or 57 million USD. So I would call it a micro cap. It was founded in 1988 by a bunch of guys that are in the aviation software industry. It runs extremely light, only 20 employees for the whole company. Other things I like to look at are insider ownership and institutional ownership. According to the teachings of Peter Lynch, if the insiders own it and the institutions don't own it, that's a very, very good sign, especially when it's a micro cap. I think it's flying under the radar. Anyway, analyst coverage is very low. There's only one analyst that I could find on the internet that covers the stock at all. There's none on Seeking Alpha. Yeah, it's not covered at all in Seeking Alpha. If you type it in Seeking Alpha, it won't show up. Um, do I own shares in the company? Not yet, but I'm very, very tempted. So this company is an aviation SaaS company. It sells flight optimization as a service. Now you're probably thinking, what the hell is flight optimization and why do I want it? It provides airlines and pilots in particular real-time communication data regarding what's going on with the weather in front of them, and it gives them high-resolution aircraft performance models to help them optimize their flight paths. So it gives you the data inputs here, weather, real-time communication, high-performance modeling data, puts it into its software program, and then it gives the pilots a optimal flight path, including telling the pilots when to ascend and descend to avoid this bad weather, and that in turn optimizes their fuel efficiency, optimizes their maintenance routines, optimizes their ability to make it from point A to point B in the safest way possible without compromising customer safety and any other issues associated with the aircraft. Now, the way it does this, it takes 140 square kilometer blocks, which is the conventional data set used by all airlines across mainland Europe, and then it turns that into 10 kilometers square. And it has an exclusive partnership with the UK Met Office to get access to this high resolution data that not all airlines have access to. So this is their moat. They have this high resolution data from the Met Office and they incorporate that into their modeling, into their flight optimization software, and it gives pilots 10x better decisions, 10x better data on how to avoid all of that unnecessary turbulence. So that's basically what they do. Now, after I've had a ramble about all that superior data, they now incorporate this into various different software programs and platforms. Aventus Nowcast, that gives you real-time weather data across all the fleet. So they have incorporated this software into existing hardware, so there's no need for airlines to shell out, thousands and thousands of dollars on new avionics software or new software for their Boeings or Airbus aircraft. It just gets incorporated into the existing hardware. They offer an app called ProFlight, which is more suited to pilots carrying around iPads with them, so they can consult with the mobile app mid-flight. They don't have to muck around with the main programs that they use within the cockpit. They just use an iPad. So that's another different model that they use. They also have a program called ClearPath. This is the program that optimizes the flight path, making adjustments, telling the pilot basically to avoid this bad weather, you need to ascend to this altitude, descend to that altitude, whatever. And they also have another product called Sigma that helps pilots make decisions around how to avoid the hazardous weather that they have the better data to be able to predict. So one of the key questions when I ask myself if I like a company is, do they have a superior product or service? And the clear answer to this is yes. They have 10x better data as a moat. So their product, their data feeding into their software is 10 times better than what is usually what is currently industry standard. They have the most accurate weather models available, and they are able to deliver value for their customers. That's another key question I ask myself when I look at a stock to determine if it's a good company or not. Um, Another thing that I like, there's no analyst coverage at all, only one in Swedish. And I do recommend you guys reading that. I'll leave a link into the show notes of how to access. They do provide a really good write up of what the company does, where the company's headed. They're the only ones that provide a bit of an earnings forecast on on how the company is tracking. So I'll leave that in the show notes. Um, and the other reason why I like it, it's SaaS. It's a SaaS company. I like most SaaS companies that I come across. It's capital light, it's easy to scale, there's high margins, and there's high predictable recurring revenue. They're the four main characteristics that I like in SaaS companies, and it's reflected in the financials if I have a quick look. So you can see year on year, they've increased revenue since 2021. It's all gone up and to the right. Balance sheet is strong. It's all gone up and to the right. And free cash flow. Cash from operations has gone up. It had a bit of a dip in 2021. That's a post-COVID period. But after that, airlines are starting to adopt the technology and make use of it. A few more notes from the income statement. They're growing at a quarterly run rate of 34%, and earnings are around 50%. I don't think that'll change anytime soon. I expect to continue. They have a total cash balance of 27 million in the bank and zero debt. So that's what's not to like about that. So it's not all sunshines and rainbows. So there is potential risk going forward. They do have a number of trials in the pipeline at the moment with a number of different airlines. And then there is a risk that they don't convert those trials into signed contracts and ultimately revenue on the top line. So right now they have a good pool of clients that they have existing contracts with, but they need to be able to take on new to pick up new clients and pick up new contracts. If they don't do that, then the revenue will stagnate. There is some competition out there, but there's not much. I'm not too concerned about that. I'm more concerned about the trials not converting into revenue. The other key thing to worry about is evaluation. Because it is a SaaS company, it trades very rich multiples. So um, please be aware that if you do buy this and it is going to be volatile if they do have any major changes in the business. The future for this one is hard to predict because you don't know what general direction the aviation sector is going to take. It's very prone to being disrupted or derailed by something. Um, However, they on the most recent earnings call, they have announced that they are pursuing new products. They are recruiting new internal people to sell those products to air traffic controllers and the like. They're recruiting a chief technology officer to lead that product development. So that sounds pretty good. Like if a company's coming out with statements saying, "Oh, in the future we're going to be looking into new products, we're going to be targeting these new segments and sectors," that's good. That's good things you want to hear. It's better than more of the same. We're just going to consolidate in our existing product suite. No, no, thank you. I'd rather a company that has a pipeline of products in the works and is able to generate revenues from other sources, expand geographically, those sorts of things. So I think the future in this one looks pretty good. I reckon AVTECH is worth 8 hidden gems out of 10, and the reasons I think this is it's a simple and repeatable business. It's really easy for me to get my head around and understand. They sell these software programs that help airlines run more efficiently, save time, save money. It's high margin. It's a SaaS company. There's not a lot not to like about that. The financials are good. They got no debt. They got a cash pile that gives them optionality going forward to develop new products. And the main value proposition of the company is their software has better data. Better data allows them to avoid turbulence. Less turbulence means they save money on fuel, and fuel is the biggest cost for airlines, so it saves them a lot of money. And that's my thesis. Thank you very much for listening. Thanks very much for watching. This was not financial advice, and the information contained within this video is only for information and educational purposes. I do not give buy or sell ratings on stock, and I always conduct your own due diligence and consult with a financial advisor before making your own investment decisions. If you want to follow me on Substack, I do publish more deep dives for free on my main Substack channel, and also sign up to Patreon where you can become a member and get access to my stock ranking sheets and all of my due diligence work that I do behind the scenes. Thanks very much and have a fantastic day.